Otakimi here. Who else would it be? This is the Bitcoin brief for May 26th. Hope you've had a good day. Today is a holiday, at least here in the States. And so this may or may not have an effect on anything. I wasn't going to share any videos for today, but I got a little, about a 15-minute window of free time. So I wanted to do a quick video update, about 5 minutes long-ish, and just see what we're looking at. Also, observations with Otsu is usually a Monday video that's going to be postponed till tomorrow because of the holiday as well. So look forward to that. That's going to be a weekly time frame situation as well. Those are probably my favorite videos for the week. I get mixed receptions on those, by the way. Sometimes I get like really good views and really good responses, and then sometimes I get next to nothing. But by and large, those are my favorite, like, because the weekly time frame, higher time frames, puts you into a bigger scope. I highly recommend people to look at a higher time frame first. If they're looking to trade, look at a higher time frame first and then zoom in or zoom out according to your needs, because I think the weekly gives you a good perspective. AREN in particular on higher time frames gives you a much easier outlook. So we're going to look here just briefly at the weekly here with Bitcoin. Then we're going to go to Ethereum, Solana, and other time frames. But what I want to see here is we have a high bullish cross here at about 65%. This was at May 12th. So we've been in this for, this is our third week entering with this cross. And usually that's a good sign. When we get a high bullish cross, usually we get something like this where it kind of continues on, right? And so that's pretty good here. Now we do have a divergence on the 2-week chart. And this is something that I have... I want to look more into. I'm kind of just shooting off the hip right now. But when we get divergences at the 2-week, we tend to kind of stall or we drop down. The last two-week div was actually right here. This was just a little bit of an uptick here, a little bit of a downtick here. A lot of people, there's a lot of controversy around divergences. I'm more of a strict legalist when it comes to divergences. Like, if it counts statistically, it does count. Some people think it doesn't, depending on the angle. This one was a very small one, and it led to a downward move. Now, it may reduce the effect. I still disagree with that, but I can at least understand that point. But from the top here, from the divergence all the way to the bottom, we did do another 20%. So if we do that here, and we start our Bitcoin analysis, by the way. So if we do that here, we're looking at roughly like 80, like 86 or so. Was it like, yeah, like 86.6. So roughly between 85 to, let's say, 90. Let's kind of draw it out just a little bit. So you're looking within that range. And so that's going to be very interesting. I think that would be a much bigger dip than people expect. We did not get the deviation that I wanted a deviation, but we didn't get that. Either way, it would have went more for a downward trend. So we'll see how that goes. The 2-week chart's still pretty good AREN-wise on the 2-week, but again, the divergence is in play. The last, we also had one right here. So it could do something like this. So where this was a divergence as well, right? So, but this also resulted from the top to the other top, resulted in another 23%. So we could get something very similar. We could actually go down 20%, but we could also go up 20%. And if we do that, you're looking at like 133,000. Now, I actually think this makes more sense, that we would actually go up and then we would come back down. Now, the thing is, this is 13 candles, and so this would actually invalidate. And so that we're in kind of a complex situation. I think statistically, a downward move is probably more likely. But you just kind of got to go with what you see on the charts here. So that's what I see on the 2 weeks. So I'm going to zoom back in from that. From the daily here, we have this channel. So there's two things I want you to know on the Bitcoin section here. One, you have this blue order block here. It's a swing high order block. We were kind of in the middle of that. And so you can quantify it like so. And it wasn't really well respected. And that's completely fine. It doesn't have to be in this case. But we also had this channel here. So the channel here is really my main focus with this, because we're pretty much stuck in this. We've been in, it started really since April 21st, so it's been in a pretty good, pretty good long run, really ever since the run up. And so I think that's also why we've had this pretty escalated run up for past couple months. So kind of stuck in that channel now. Though the break of the channel is really going to depend on where we go. Based on my experience, this does tend to break to the downside. So we'll see where that goes. We did have somewhat of a deviation up here, and so it's not a full one. It needs to break below 106 first. And so this is where it just kind of follows the channel. So if it breaks to the downside, then we're going to have an extended downside. If it breaks to the upside, we'll have an extended upside. So that's the biggest context that we have. I know that doesn't share a lot necessarily, but you can look into this quite a bit and say, well, it's going to follow this channel until it breaks. And when it does break, then you have the next momentum shift for the next 30 days probably. So apologies for that. So so we'll see where that goes. As far as the price action standpoint, we've already broken it to the upside to about 111. So breakout trades are kind of insignificant right now. You could do one if we do break above the zone above the zone to like 112. Stop loss would come back down to 107. But again, you have this channel here, so even at the current candle, if you go up all the way to the top, it's going to hit 114, almost 115. So this is where breakout trades get complicated, because you're still within that channel. The channel can always break downwards. Okay, so you got to think of it. You got to think of channels in terms of diagonal, like supply and demand. And so as long as it holds within that zone, that's like saying it holds within this regular price action bar. And so it would be something like, where's it at? Excuse me, I drank some coffee before I started here. It'd be something like this. So not the best situation here, but it's stuck within a range for like 8 months or whatever. That's going to be very similar to what that looks like, but it's going to be diagonal instead. And it's going to give you the perception that we are actually going up, but that may not be the case. Well, it definitely will go up if it goes up, right? Obviously. But if it breaks down below this trend, then the entire trend is over. Okay, so I think that's something just to keep in mind with that daily. Let's go to the 4 hour here. With the 4 hour. You had your little bit of order block double top situation here. Now, this is where we can go up a little bit more to 1010. That's kind of the rejection zone on that. We do have a high bullish cross as well, so that's not too bad. But we're still, this should have been a reaccumulation pattern that just kind of faded. Some people want to blame that huge Bitcoin long, whatever, and whatever. I'm not. That's not my say. But as far as this goes, reclaim this a little bit on the lower time frame. Still need to get above that 1010. So other than that, I think that just shows what we got going on. So we're kind of stalling a little bit, but again, the big channel is really the biggest context with that. I'm going to mute for about 10 seconds, then we're going to go to Ethereum. All right, so on to Ethereum. We can look at a little bit of weekly here. It's still doing pretty good. I'm going to get rid of all this just for the sake of it, for clarity. Still closed like 2 weeks below into the zone. Actually, this closed pretty bullish. So first of all, one, it closed above the price action bar. Second, it closed above the band. That's pretty good. We have a bullish wedge here at the 50% mark. So that's pretty good. This should accelerate actually. And so what you could see here, it's going to be different than Bitcoin, because Bitcoin has also ran. Dude, I don't know what is wrong with me today. Excuse me. So with Bitcoin here, you had 1, 2, 3, 4, 5, 6, 7, 8. And so we're currently on the 8th one. Now, typically this doesn't go above 9. That's the rule, right? It has only gone to 8 twice in Bitcoin history. So if we hold this, there's a good chance that the next candle is going to be bearish, probably something like this actually. And so that's something good that stands out to me. But we had quite a few candles. We had 7 closing green candles in a row, pretty solid. With Ethereum, we only got like 3, and then we had another downward move. Now we had a closing candle, so a little bit different scenario. You can't apply that same theatrics to that. but you're still above this level. Got the bullish wedge. This is still looking pretty good. I think that we could hit actually lower to about 2380 or just under 2400, and then we actually snap back above that. I think Ethereum looks really solid here. I'm not interested, however, in Ethereum BTC. I don't believe BTC pairs really can trade well, honestly. We've decoupled ourselves from the Bitcoin pair over the years, so they become pointless in my opinion. So, but this isn't too bad. This is the big flip zone, and the thing is, this could come back down, but I would not want to fade something like this. Now, Ethereum of all coins can certainly fail. It has a tendency to fail, right? But this is a very key level, and that's why I had this drawn out where it was. And you could play this two ways. One, you could start here at the current entry, stop loss below the bar, take profit here at the top. That's certainly one way to do it. The next way would be very similar, but you would just hit the wick instead. Now you have a pretty wide stop of about 31%, so that's going to give you a little bit of weak position here, but you could also target higher if you wanted to. If you're looking at this for the long run, that is certainly an option to do so. So those are the two ideas I have for Ethereum for the weekly, and this is a weekly position, so understand that wider stops could be better if you're doing, especially if you're doing spot and things like that. So going on to the daily here, you had your divergence here. I've talked about this last week, that divergences should play a key role. The thing is, we had a drop down, then we had a push up, and so we all got excited. It kind of tricked me a little bit too, but this is something to keep in mind. Like, this is a pretty boring day so far in the market, so we'll see how this goes going into tomorrow. But have a divergence here. It's still holding against the band. It failed just a little bit. This is not the best sign. It's not the worst either, but again, that's why I want to hold on to the weekly perspective, because it's going to give you much more interest. We do have a smaller cross hook here, and so that, first of all, that signals bears are in the trend, but they're weaker, and so you're going to get something like this, get exactly like this actually. And so we had a weak bear cross, we had a weak bull cross, and then we had a very strong bear cross. And so that's why we led to the downtrend. And so we could see something like this as well. Now this is coming to the upside instead, but it is the same pattern. So we'll see how that works. See if I can find another one here. You had a little bit one here. That's a little tricky. That's got both together, so that's a little tricky. Did lead to some upside, a little bit upside. And then eventually led down, see. And that's what I'm looking at. I'm not looking at the near term. Like this could go up like 10% tomorrow, and I still think this could go down. So what I'm not looking for a temporary up like this, because you had like one or two candles going up. I'm looking for the big move. So the big move to me could go either way. The daily is favoring the downside, but that can change. It can always change. So we'll see where that goes. I think the weekly still looks pretty good, but daily's kind of in question. Solana here, very similar. We have the daily setup here. I was saying last week how Solana and Ethereum didn't look much alike. Now they're looking very similar as they kind of bleed into the trend here. And so wouldn't be surprised if we see kind of a failure of this as well. This has been under for quite some time. So like you had the bear div here back in May 14th. Had an inch up here, tried to attempt to go up, didn't. So we're still behind. We're still down here. We've been down here ever since May 14th, May 15th. And so it's tough. Now, the weekly still looks okay. It doesn't look as good as Ethereum, but I still think it looks good. This is a little bit below the price action block here versus Ethereum that is above it. So a little bit difference. It's very interesting how they're starting to mirror each other, and they're kind of taking on both sides. I think Solana is looking the weakest of the two, but Ethereum has lost some strength, a little bit of strength, but which is funny because it actually gained more price. So that's going to be interesting to play out this week. And so that's pretty much the video. So my summary really has been for the last 2 weeks. I've 2 weeks ago I was thinking that we would get a downward move or some sort of chop. Last week I was much more, or I'm much less complacent about that now. That was just a thought I had 2 weeks ago. Last week I really thought that was going to happen. We didn't get it last week. We actually we did okay last week. Let's see if I can look this up really quick. We had a little bit of a bullish trend, not much, and so like 2%, and so I thought that we'd get something downward, but we did reject here at the mid. So I think this week that's going to continue. And honestly, this is not something that I want. I'm not trying to push a narrative here. Like I really, and the reason I have to put that disclaimer is there's a lot of people out there that are trying to sell you stuff. Be like, it's happening, Big Short, it's happening. That's not what I'm saying. Not even close to saying that. First of all, second of all, I'm gonna look at what I see on the charts. So my mind will change as I see things because the charts change, right? So, but the more that this doesn't happen, and the more that we still fit the statistics for this, the more likely that becomes. So I do think that we're going to get either a downward, somewhat of a downtrend, or a very like harsh chop or whipsaw at some point between now and today's May 26th. So between now and August, I think we'll get something. And I know that's not very helpful, but I do think that we're going to kind of fade this just a little bit. So we'll see where that goes. I think that actually is a very bullish sign. It's going to lead to a good opportunity towards the fall, either very late summer or very early fall, to give you an opportunity for the rest of the year. And that might be your only opportunity left. So we'll see. And I say this to say, because a little extra added commentary, I say this because I want you to analyze yourself. Like, what were you doing the past 60 days? Like, at what point did you decide that the market was bullish? Okay, if you thought it was bullish, if you flipped from bearish to bullish less than 3 weeks ago, you're doing it wrong. Okay, you're doing it wrong. The market was way bullish before then. Okay, we had a lot of opportunities to know from at least April 14th. And so let's say you had 30 days. My goal in this is not to tell you you're wrong, right? My goal in this is to analyze yourself and see, were you late to this move? Okay. And second of all, if you were, how can you take advantage of this the next time? Because a lot of people have flipped bullish for the past 2 weeks. But you can look here, especially on the total market cap. Let's get this rid of here. If you look at this from a price standpoint, and obviously not many people are going to get in the bottom, but from there until 2 weeks ago, that was a 32% move. Okay, and so that was this, right? So the rest of the move was only 3%. So did you get in the first 33%, or did you get in the last 3%? That's kind of what I'm saying. And so my goal in that is to tell you to try to find that advantage the next time. Also, too, if you don't understand that this could weaken, and I'm not saying it could, it definitely could continue to go up. I just don't think so. The stats, just the historic stats, it would have to break historic rule sets to continue to go up past, I'd say 135,000. So, and it could go to 130 and then come back down to 115, let's say. That's certainly possible. But either way, that's still a dip. And that's what I'm saying is the danger with people trying to be bullish right now is that they're going to get blindsided. And so, like, especially if we continue to go up, we could go up like 15% this week, and then we go down 30% the next week, and you're going to be completely off guard, right? So just keep that in mind. We could do something like this where we actually went up, and like, what if you got in here and that's great, euphoric, and then we're down, and then you're negative. So this is why, and I'll stop here in just a second. This is why I advocate for trying to be in early as you can, because being in early gives you the proper perspective on the charts. Because you look back on here and you say, oh, the markup started up here, top was here, bottom was here. But that's not how people view it. Okay, so a lot of people didn't even consider the run up until here. Okay, and then when they got up to here, they're euphoric. They held down here. Okay, and then they didn't even sell till here because this was your capitulation section, right? So let's put this like so, and it's not perfect, but you'll see what I'm saying here in a minute. So from here to here, so some people bought here, and this is when Tesla bought, by the way. Some people bought here, ran up, and sold it here. So from top to bottom, they only made 60%. Okay, and again, I'm cherry picking a little bit to give you a perspective on this. A lot of people didn't buy here at all, and then they let this run up. Okay, but if you would have did like an EMA, for example, or just the ARIN that I have on here, ARIN band, and let's say you sold here and didn't even do this, you would have 442% with just the ARIN, just flipping the ARIN from bullish right here to bearish, because you had a low bullish cross that ended up working out pretty well, and you had a high bearish cross, and so that would have netted you more money in less time. Okay, more money in less time, because this would have been 350 days, 360 days. That includes the big downtrend, by the way. If you even, I'm not saying you would have did that, but it would have got you more versus holding here and then selling here. That would have been 480 days. So you would have made less money, and you would have taken 120 more days to do it. That's why, and again, I'll stop here just a second. That's why this matters to me. That's why getting in early matters to me. This is why identifying your time to price ratios matter to me. Okay, and this is why I can get in and get out at a certain period of time. I can take less time to make more money at a better opportunity because of these things. That's why I look for tops and bottoms, because if you can back test them and get within a good probability, which my probability is about 85%, if you can get that percentile, you have an advantage. And guess what? If you buy in here, and let's say it runs up from, this is a total market cap, so similar situation. Actually, this is a better situation. So from run up to run here, you win this flip. That's 430%, right? But from the Tesla situation to like right here, that was break even. So it's even worse on Bitcoin. So, but I say that to say, finding these opportunities matter, because once you find the bottom and you actually get in at the bottom, you ain't got to worry about it. You ain't got to think about anything. Like when I got the bottom here at 16.8, once we got past this zone, okay, I was a little nervous here, I would say, probably. I think I was. But once we got up to here, like 28,000, I was fine. And I've been comfortable the whole entire way. So like, let's say you get in like 17.4. By the time you get up here, you're already up 67%. And even at the lows of this level here, you're already at 49%. You're still way above, right? And I still have some of the Bitcoin left over. And then once you get up to here, let's just say you bought at 21, right? It's a very conservative flip, right? That's a very obvious flip. You're up 400%. You're up almost 5x, over 5x, and you ain't worrying about these 5% moves because you're already at over 400%. That's what I'm saying. So lock in that price to time perspective. It should save you time and make you money. So I'm not saying that it's not guaranteed, but take a look at what you're doing now versus what I just said, and come to your own conclusion. So anyway, that's the video. A little bit long, so I apologize. Scratchy throat, apologize too. I got observations with O2 tomorrow. Yeah, and that's pretty much it. So a little short on the videos. Other than that, I don't think I'm doing another video today. Hope you enjoy your holiday. Have a good one.